Okay, hi everyone, and welcome back to Tech Talk. Tech Talk is a monthly web series where I get the opportunity to sit down with Marcello Montanari and Rob Cavallo. Marcello is a managing director and senior portfolio manager on the RBC GAM North American Equity team, and Rob is a senior portfolio manager on the North American Equity team. Marcello and Rob manage a number of growth-oriented strategies, perhaps their best-known strategy being the RBC Life Science and Technology Fund. This is a strategy that invests heavily across the technology and healthcare sectors within the U.S. equity market. And the reason we get together is both these sectors combined, I think, are two of the most innovative sectors within the S&P 500. And so it's great to get together once a month to talk about all things technology and healthcare related and keep you all up to date and current on what's going on within this space. So Marcello, Rob, thanks for joining me.
Thanks for having us.
Thanks for having us.
Awesome. Well, I was thinking for this month's episode, we are at the halfway point, so I do kind of want to end off this month's episode with a few thoughts from each of you on healthcare and tech as we work towards the end of the year. But I also want to talk about some related news happening across the AI space, and then a few company-specific pieces, perhaps around AMD, Meta, Microsoft, and so if we can jump right in, maybe I'll just start off with sort of the AI race, if you will. I know that within AI, but I think it's safe to say we're kind of past that point of questioning, whether or not the technology is legitimate and whether or not there's real world applications. I think now, we're hearing chatter and we're seeing kind of this arms race heat up across some of the major hyperscalers. Recently we saw that OpenAI and Google have began working together, specifically OpenAI using Google Cloud services and perhaps adopting their TensorFlow chips as well. And so maybe I could ask you guys to kind of explain about what exactly is kind of going on there and what are the implications for the various infrastructure players within AI and what does this mean for Google's own AI strategy?
Okay, well, maybe I'll start. It's kind of hard to tell with any degree of precision what's going on exactly between Google and OpenAI. As we know, OpenAI has been partnered with Microsoft for quite some, since almost the beginning, really. There could be a number of reasons why OpenAI has reached out to Google to kind of use some Google Cloud services. Number one, I would say, is it's kind of no secret that the relationship between OpenAI and Microsoft has been a little bit difficult as of late, and there seems to be some sort of back and forth into what the ultimate structure of OpenAI will be and what the contractual obligations will be between the two, and so on and so forth. And obviously they're jockeying for position. So one element might be that OpenAI is kind of negotiating in public with Microsoft by reaching out to Google to do stuff. That could be one of the reasons. Another one is that Microsoft actually kind of has a ROFR, like a right of first refusal, in terms of like turning away business from OpenAI if they don't want to do it. And we've already seen that they've actually turned away some business that, I guess Microsoft would deem it to be kind of low value as far as they're concerned. So they've kind of turned it away. So that means by definition, since OpenAI doesn't have much of its own infrastructure, they got to go somewhere to get it. So obviously, Google Cloud services might be one of the reasons that they would go there. There's also kind of a school of thought that, since there's a view that OpenAI will gradually take search share from Google, and that may or may not be true. Obviously, they are taking share of like generalized searches and stuff like that. So there's a view that maybe Google views this as a way of, hey, if we're going to lose some share, at least we can process the search requests out there. That's a bit of a wonky thing idea in my view, but at the same time, it's a non-zero probability that something like that's in play. And then alternatively, actually, probably the most likely is like, we'll call it Occam's razor. The easiest, the simplest explanation is probably the right one. And ChatGPT is at the moment the de facto consumer AI platform out there. And last I saw, they're like at 800 million users. Their token use is through the roof. And we've already seen so many companies hit capacity constraints, whether it was Microsoft, AWS. They've hit so to think that OpenAI hasn't hit capacity constraints and had to scramble a bit would be naive. So I think that that's probably the easiest and probably the most likely reason that they've gotten a little bit closer. Just they need the capacity, and Google's there, and obviously it's not for free. In terms of the point you raised earlier, like to use TPUs and stuff like that. I mean, gets into a little bit of inside baseball for people who don't understand all this stuff. But right now, OpenAI stuff is pretty much built off of NVIDIA GPUs and AMD to a lesser extent. And from my understanding, the relationship between OpenAI and Google is to basically use Google's fleet of GPUs from NVIDIA and to a lesser extent AMD. They have an agreement to test out Google's proprietary TPUs, but I don't think that there's any firm commitment on OpenAI's part to basically, start moving like serious workloads over there. So that's kind of where it all stands at the moment, I'd say.
And maybe I could ask you to comment. So we also, recently read about Meta's push recruiting a lot of folks from OpenAI. Maybe you could comment a little bit on that. And is it safe to say that at this point, it's possible that we're starting to see maybe like an early emerging winner across the space, or is that still sort of too early to call?
I don't know. I stay still a little bit too early. I mean, there's definitely some front runners here for sure. I think what happened at Meta was, I think Llama 4 was heralded to be like the next big model to come out, and then when the training was complete, it's clear that it didn't achieve its benchmarks. And what we quickly saw after that is that either the people were forced out from Meta or they quit on their own. But some key people left from the Llama team, and it looks like Zuckerberg just basically kind of hit the reset button here and said, like, this is too important to lose. And as a result, he's gone out and by my count, he's already hired, after considering the people that have left, I think he's hired over 20 people now. And he's hired them, the reports are some of these people have been hired at kind of Shohei Ohtani-esque levels of pay. But anyway, so he's clearly committed to this. Meta is committed to this. And on top of that, I mean, the first move he made, if we can believe some of the reports we saw, was he went after, or he had discussions with Perplexity about acquiring Perplexity. And that didn't go anywhere. And, one day, if that in fact was the case, one day we'll find out why that didn't happen. But as far as, so his next step was to basically do an acqui-hire of Alexander Wang from Scale AI, and he brought in Scale AI to 49% position. And he's building a team kind of around that. And then he's gone after a couple of other big names like I think it's Daniel Friedman or Daniel Gross, Friedman and Gross. I don't remember their first names, but some pretty big names out there. So he's gone after, like I said, about over 20 people now, just indicating that he's in this for real.
Great. No, that's really helpful. Thank you. Maybe pivoting ever so slightly over to you, Rob. Recently, Microsoft kind of released this new healthcare model, which is AI driven. Maybe you could just talk to us a little bit about that. I'm not sure if it's something everyone's sort of up to speed on, and maybe more importantly, what this kind of means for the future of the healthcare sector.
Yeah, and sorry, I just wouldn't mind adding one point to the OpenAI Google conversation as well. So, I think to Marcello's point, yes, it does speak to capacity constraints, and specifically probably NVIDIA GPU capacity constraints. What's notable is this year Google dramatically stepped up their NVIDIA GPU supply, and it's something like 2/3 of their processors are going to be NVIDIA GPU based versus only 1/3 from their internal chip that they make. So I think this is also just about OpenAI getting more access to, as Marcello said, to NVIDIA GPUs. And one more point, just what's interesting is like they now would have an arrangement with obviously Microsoft, Google, Oracle, AWS is the one that's missing. And is that what does that mean? Is that on the come? Is that a shot against AWS Trainium, which they're trying to push? Is it capacity constraints at AWS? I don't know. I just thought that was an interesting point to keep in mind. Maybe that's the next announcement to, that we'll see out of OpenAI at some point, as they need more capacity to meet the seemingly endless robust demand for ChatGPT. Back to your initial question though on Microsoft, they created basically this healthcare model, somewhat designed around all the major LLMs, and it's a diagnosis tool. And they ran some interesting tests very recently, or have been doing it very recently, comparing to basically how accurate can they diagnose complex cases versus physicians with like upwards of 20 years experience. So the first step of the process, they competed against medical license exams in the US, and they basically got to a point where they could get 100% on these exams. They next went to this next step where they basically used 300 cases that came out of Mass General in the United States that are published in the, and in that control group against physicians, the result was they basically had a rate 4 times greater in diagnosing the patient, diagnosing what the actual disease and whatever it was relative to those experienced physicians, like an 85% versus 20% rate. And they did it at a lower cost, meaning they could do it at a much lower iteration to get to the final answer. So I don't know if it means anything today. This is not replacing doctors today, but it just goes to show, like, something we've talked about for a long time, is that, healthcare is going to be arguably one of the biggest areas for use of AI as the tool continues to be developed over the years. And this is just another signpost that, we're on our way, and these use cases will just continue to, I think, present themselves over the coming months and years.
Oh, that's excellent. Really fascinating, actually. Rob, maybe I'll stick with you. I'll pivot a little bit, and I want to talk a bit about AMD. We've seen a big reversal to the upside in performance recently, and so maybe just walk us through what's driven this, and where do you stand sort of on this opportunity and sort of that AI GPU battle between them and NVIDIA right now?
Yeah, and aside from just broader recovery.
I think we've lost.
We may have lost him there.
I think we lost you, Rob. Nope.
Oh. Sorry, can you hear me now?
We can get him back. We can hear you now, yeah.
Okay, I'm sorry. I'm not sure what happened there. Do you want me to start again?
You've gone sideways on our screen. I don't know what happened there.
Really? My phone is, nothing happened on my phone here. I'm not sure what happened.
A few technical difficulties. You are horizontal now, and it looks like your camera.
Why don't I just turn my video off, or I'll turn my video off and on again here. Let's see if that does something.
We can't hear you. There you go. Welcome back.
Okay, sorry about that. So
we'll have to edit that out.
So excluding just broader AI sentiment recovery post Liberation Day lows, what we've seen is a resurgence on what the opportunity set, at least from Wall Street's perspective, looks like for AMD going into next year for their AI GPU servers. Couple big things, as the announcements came out of the Middle East on the Trump tour through that region, AMD, given the fact that they're at like a mid-single-digit billion AI revenue base, stand to be outsized beneficiaries relative to NVIDIA, and that kind of got the market excited again. And then just recently, AMD also hosted an AI event where they kind of just talked a little bit about where their servers are coming for the back half of the year, and more importantly, what their system or rack scale level servers are going to look like into next year. And they're closing the gap to NVIDIA. Look, there's still a half year, 1 year gap, but basically the market got excited that AMD is becoming truly, again, a second choice vendor potentially. And given their starting point on their AI revenue base, the upside is just very attractive for the valuation it was at the lows. And that's what's really driven the recovery, just more confidence around what that opportunity set over the next kind of 12 to 24 months might look like for them.
Oh, that's great. Thank you. Guys, maybe, before we wrap up the episode, I want to, like I said, leave a little bit of time to give you guys a chance to maybe just offer up some thoughts. We're halfway through the year. Obviously, there's been a lot of volatility, a lot's going on. So maybe just, a few comments from both of you on kind of what you're looking out for, what you might, think, what you might be expecting over the next 6 months until we get to the end of the year.
Okay, so maybe I'll start and hand it off to Rob. We hate to make short-term predictions. We like to keep most of our focus on the longer term, and as I like to say, get it right and sit tight. But we're still positive. We've got a significant secular growth tailwind behind us, which is really driven by AI, and we seem to be going from strength to strength, and that's basically helping to drive the cloud migration and the cloud infrastructure build. So that's all systems go from that perspective, and that's both in the traditional AI focused cloud transition, but also in the traditional and the AI focused. And in the meantime, like amongst other sectors, like we know that cybersecurity remains a priority for CIOs. We know that e-commerce continues to shift from traditional retail over to e-commerce, and that's basically helping to fuel the entire digital advertising ecosystem. And then, eventually we'll start talking more and more about, embodied AI, which is a fancy way of saying robotics. But kind of when you think, but it is happening as we speak. And just to kind of open up the aperture a little bit, because people tend not to think about this, but, a chat bot is essentially a robot that lives on a server, right? And basically does its work from a server. A Waymo robo-taxi is essentially a robotic car. So we're it's not just about robots on manufacturing floors and on warehouse floors anymore. It's expanded beyond that. So we're going to be hearing a lot more about that going forward. And everyone likes to fixate on kind of the humanoid robots, and that's coming too. But I think that's a little bit further out. But all of this stuff is happening. And again, just kind of circling back to the whole AI theme, there's a lot of talk about agentic and, is it coming and what is it and so on and so forth. And I would argue that, agentic AIs already kind of exist. And if you think about both Google and Meta, they basically have these almost fully automated digital ad platforms where an advertiser just goes to them and says, here's my budget. This is the return I'd like to get. You guys handle it. And they basically put it in their black box, and the black box creates almost everything for them. Right. Now that we have generative AI that can actually sit in front of all this, and their products are called like Performance Max and Advantage Plus, respectively, for Google and Meta. Now that you got generative AI that can sit in front of this, you're in a position now where you can fully automate the entire digital advertising workflow, and that'll allow a lot of more small and mid-sized businesses into the whole ecosystem. So there's a lot of exciting stuff going on here, and a lot of stuff to keep our eyes on and hopefully take advantage of.
Absolutely. Rob?
Yeah, sorry, just one maybe high level thought, and then a couple more specific to healthcare and tech. But towards the beginning of the year, we're talking about kind of a year of two parts. The first half of the year, we're sort of taking our medicine with trade negotiations and so forth. The second half of the year, we get some of the sugar, and we started to see this come through with the tax cut and trade negotiations seemingly on a path to somewhere okay, potentially going into a Fed easing cycle. So we think the setup is still good. We can have a long argument about how much of that is priced in, but we feel like the broader setup is favorable once we get past this Q2 earnings season, which, given the sharp rally in the market since the Liberation Day lows, we're not saying that it's a straight line higher, but we're generally positive. More specific to some events I'm thinking about, NVIDIA, we get the meat of the curve of the launch of their new server system level product. I think it's possible that this puts the stock back on a more meaningful beat and raise cadence into the second half of the year, which could get excitement and kind of maybe take the stock to the next level out here beyond $150. Within healthcare, two important trials I'm thinking about, both from Lilly. One is an oral obesity trial that's going to read out probably during the fall sometime. This would be a major unlock to get an oral obesity approval, or oral obesity data that could lead to approval next year. And we're going to potentially get updated Alzheimer's data in very early stage patients too. And this could be another exciting opportunity that the market isn't really talking about at all right now, and could have read across to Biogen and some others. And it could be, just a general sentiment flipper to to the positive side, which the sector needs. And there's a few more, but those are the ones I'd sort of highlight as being most meaningful that I have my eye on today.
If I could just throw one last thing on top of this, the budget bill has provisions for accelerated depreciation of capital spending and the expensing of R&D. And we shouldn't lose sight of the fact that this could actually pull forward a lot of capital spending, because companies now will be able to kind of like write it all off on the first year, which basically depresses earnings. So it'll have a negative earnings impact on the first year, or first, call it a year and a half to 2 years. And then after that, you get like a bump up. But the cash flow impact is like from day one sort of thing. So so they could pull business forward and accelerate some activity again. So this benefits the whole kind of infrastructure layer of AI again.
No, that's really insightful. Thank you, guys. We'll wrap the episode up here. So once again, I want to thank you for spending time with us this month, and thank you to everyone who tuned in. If you are interested in learning more about some of the strategies that Marcello and Rob manage, strategies like the RBC Life Science and Technology Fund or the RBC Global Technology Fund, we do encourage you to visit our website or reach out to your RBC GAM contact. Thanks again, and we will be back next month.